is amazing. Jesus. How many people here own any cryptocurrency? Okay, so some of you own cryptocurrency and don't even know that it's not blockchain. That's very interesting. More hands up the second time than the first. How many people are just here for the booze? Totally okay. Thank you. We'll talk later. So how many people in here are founders of a company or are thinking of founding a company in blockchain? Everybody who's here to invest, go notice those people. They need to know you. And anyone here who is, there's been a lot of Wall Street sort of meeting crypto, right? Is anybody else here from a more traditional finance background and looking to expand? Okay, very cool. So you come to the right place. So I just want to introduce that this is basically sponsored by BlockTelegraph. BlockTelegraph is a news outlet online, founded by Jordan French. He's the executive editor. And also we have Pat Codfield in the back. He's the managing editor as well. Thank you so much for commanding the desk there. So BlockTelegraph is a great place for news, information, and also just to stay abreast of things. So if your medium feed is a little bit kind of out of whack, you might find a more streamlined feed on BlockTelegraph. So without further ado, I want to bring up Jordan French, who is going to be moderating, essentially doing a fireside chat with Jeff Wernick, who is an early investor in Uber and Airbnb. So if you're wondering about all the votes that you missed, but maybe the next votes you can catch, this might be a good place to start. So I'm just going to invite those two up here. Jordan, please join me. And Jeff.
I'll invite him up here.
Awesome.
Thanks
so
much.
Thank you so much.
I think I said that there.
Okay.
Let's turn it off.
Want to turn it off?
Is it off?
Yes.
Everybody's happy. Thanks so much, Monica.
Nice to
Everyone
see
give it up for Monica Profit. Great name. I didn't think I could.
Oh, there's my book. There we go. Blockchain 101.
You got a book by Monica's book. Thanks so much for co-hosting us with this content. Look, it's great to see you're all here. I know you're so excited. You're still talking about Jeff Wernick, what he might say, which is a lot. So my name's Jordan French. Kind of a storied career myself in entrepreneurship. I don't want to get into that too much, but with a bang of the gavel, as they say, started yet another startup application, BlockTelegraph. Now, yes, there's so many industry trade hubs. Jordan, you could write for The Street where you're still at large. You could go to CNBC. You could do whatever in the financial space. Why start your own shop? Well, media in any emerging industry is often caught up into whatever else it's selling and becomes an absolute bull-fest, pitch-fest. We stand in contrast to that. So we're the first US-based non-pay-to-play. That means earned media, right? If you want to pitch us, we don't stick out our hand and ask you to pay us, which is actually extremely valuable. It relates to the First Amendment, right to free speech, and any non-compromised press, as we know from authoritarian regimes all over the world, which is a greater zealousy and bias than folks who are just paid off fairly, but is nonetheless extremely valuable. Wouldn't you agree? There's a couple. We got a mixed bag here. So anyway, thanks for coming out here. Really quick on the drinks tonight. We have some lovely wine. A lot of you had a chance to sample it. It's a beautiful Tempranillo, a Carinosa from Spain. We'll expand on that palette of wines in a bit after a fireside chat with Jeff Wernick. As for this series, I do want to go over that. So BlockTelegraph runs a series of talks. We've been very fortunate individually. Pat Coghill, managing editor of BlockTelegraph, and I, as executive editor, have been privileged to be able to meet a lot of the great names in this space, this emerging space. A lot of those folks have come out of other parts of the tech industry and into the blockchain and cryptocurrency space, pivot or otherwise. And you'll see a lot of those folks around too. The last thing I'll do before I get to Jeff, I do want to point out there's some great people here. David Banfield, former producer at ABC News, is in the back. Alexei Kearns, famed doorman at Hotel Chantal. Just Google him. Everybody's written about how good he is. at being a doorman. Darren McKelvey, very much a blockchain insider, is with us. James, the James Andrew from James Crypto Treehouse. If any of you are on Telegram, get on there. A lot of ears and whistles. A lot of you already are. Linda is with us, CEO at Hoosh and now Tapcoin, which is an industry player in the space. And Adrian Ashley is back with us with Lolly, and also very much an influencer in the space. And then last but not least, one who is co-hosting this with us tonight, our special guest, Monica Profit, is here. So with that laundry list of names, right, it's like a third of the Constitution. We're all about attracting great names for events, and like to keep things classy, as you can see with the wine, beautiful space, exclusive, and we're also very happy to host events at some of the companies that you're running. That's something that we do, is we go to blockchain companies and host events with them, somewhat similar to this environment here as kind of a bit of a test piece. So without further delay, and I'll be talking a heck of a lot less, and that's a wonderful thing as a moderator, I want to welcome an early investor, a storied career that we'll be able to walk through, but an early investor in Airbnb and in Uber. He sold those stakes. He's a very early investor in Bitcoin. A lot of people give him a hard time about it, about how early it was. We know what the facts are, but we'll just say 2010. And I want to welcome to our small stage, Jeff Wernick. So glad to have you here. Have a seat. This is really great. Thanks for that. I didn't expect that music. I wonder if that was your choice, Jeff.
No.
Okay.
No.
You know, we could probably just open right into a Q&A because there's already questions. I'm not going to do that. But literally, there's like probably 30 questions here already, Jeff.
I'd love to answer the questions.
Yeah, and that's what I'm all about. You know, you and I had a chance to have a good breakfast a week or two ago. Covered a lot of ground. We were also out in Half Moon Bay. That was just absolutely enlightening. There's a lot of people out there that disagree with what you have to say, and that's how I want to open this, just to lay some foundation. A lot of people know who you are. Not everyone does. And so I want to elaborate on that. Tell us about your really from a high level view of this space, the cryptocurrency space, and your role in it.
I don't think I have any role in it, really. I mean, I just, but for those that don't know me, I started in, my area, my interest in hard money has been something I've had my entire adult life. When I was on the transition team when Reagan was elected president, and one of the things that people might not recall about the supposed supply side agenda was the fact that one of the things Reagan had talked about was going back to gold. So I was an advocate of getting the government out of discretionary issuance of money and going back to a gold standard.
Before we even get into that, let's talk about money. Like, just hold on. What is money based off of? I mean, at some point, there was a gold standard. Can you elaborate on that and what that means?
I think historically, in our founding documents, and then the first Coinage Act in 1792, people might not notice that when the U.S. was founded, there were hundreds, maybe thousands of currencies in circulation. Actually, the currency that was most in circulation was something called the dollar, but you might think of the dollar as a U.S. dollar, and actually it was a Spanish mill dollar, and it was a silver dollar. So essentially, what was the broadest circulating at that point in time, actually, most of it came from the documents of the Federalist Papers, on which Jefferson had a lot of influence over, is the government didn't have the right to create bills of credit. So the government had nothing to do with the production of money. And states were prohibited from issuing bills of credit. So essentially, the only institutions that could issue bills of credit were state chartered banks, because at that point in time, there were no national banks. So either money was issued by, bills of credit were issued by private banks, or then it was mostly, silver, mostly circulated. There was some gold, but mostly silver is what circulated in money. So in the beginning of the coinage of the United States, the government never had anything to do with defining what people use for exchange and transactions. Actually, the first time the government got into the legal tender business, where it started outlawing multiple currencies, was in the 1850s. And gold became more relevant after the gold discoveries. So principally, what had served as money had been basically decided by people voluntarily engaging in exchange, and they determined what was good money and what was bad money, and the government really had little to do with it until we began the act of debasing it, which really occurred during the Civil War, which was the greenback period. That's when we first got to print money, was the greenbacks, and it was, many people think it was illegal to do so, but during a state of war, the government gets away with doing a lot of things that people after in other circumstances would not agree as being legal. And then what happened after the war ended, basically the Supreme Court legitimized what the government did. So what originally was called the least dangerous branch. So throughout history, basically money has been what people define that they have confidence in exchanging value with each other. And over the longer term, what's functioned most has been metals, either silver or gold.
So let's talk about, you brought up gold a few times. We can talk about other precious metals, but predominantly, at least in U.S. history, there's been can you all hear me okay?
Not only U.S. history, you find coins in Roman times. And
why?
Many currencies is what they basically use.
Why base a currency off of a precious metal? Why'd they do that?
Because it was durable. It was relatively easy for people to carry around, and it was durable, and it was not so easy to produce. So therefore, typically what happened is it preserved a stable value, because whenever the price went up a lot, more people went and mined it, and then the price would go down. So it was found to be the best stable thing that people had, that they could exchange value with, that was durable and portable, more than any other commodity that could be used.
So in a way,
certain local economies, Virginia used tobacco. So if when we had economies local, people for local trade used a commodity that was unique to your circumstances. But for trade beyond local, then you needed something that would be easy to move long distance, whose attributes would not be changed by the act of moving it over long distances and storing it. So so it really depended upon where you are and what was the dominant commodity at that point in time on what people used as an exchange of value. But it was decided, mostly, the economies were then local, pretty much.
Yeah.
So it was pretty much defined by the circumstances of the local community.
And that relationship, though, I want to add to this foundation. It's invented. You'd call fiat a technology. Is that fair to say?
Yes.
Okay.
A fraudulent technology, yes.
Fraudulent. Okay. We're already stronger. It's great. So
it's backed by nothing.
So let's talk.
Actually, after the U.S. got off when Nixon abrogated Bretton Woods, one of the senior guys at the New York Fed, a very prominent banker, I think his name is John Exter, actually wrote a paper in a year or two later, I think 1972, where he called currency not backed by anything, I owe you nothings. So I think that's probably the best description of what circulates today is I owe you nothings.
There are a lot of folks from outside the U.S., but just for the illustrative point.
That's true for everyone. So all I owe you nothings. All currency are I owe you nothings.
So on this note, though, I'll let people applaud for sure. So just so people understand the structure, I think it's a really great foundation on this runway. But so people understand the structure of how U.S. government works, just as an example, there's a treasury, there's the Fed, someone's printing money. It seems very vague for most people. They're just used to using, greenbacks, right, dollars. Can you explain for this audience how all that works?
The production of money?
Yeah. Today.
I think what is the Federal Reserve created system? The Federal Reserve System was created in 1913. It's the same year we also got the income tax. And for all of you to know, the reason why we pay an income tax is to support the financial system. If we didn't create the Fed, we wouldn't have an income tax. After the crisis of 1907, where the bankers were not happy about basically doing a self-reinsurance regime, they basically decided that it would be good to have a lender of last resort modeled after the Bank of England. So I don't know if you are familiar with Griffin's book on Jekyll Island, but for those of you, most of you familiar with the story of Jekyll Island, or just a few? Okay. Well, it's just a few, then I'll repeat it. Sorry for boring those that already know about it. So, the United States had a very small federal government. So we basically had a system where each state was pretty much independent, and the federal government did very, very little. The only time the federal government did anything was pretty much in times of war. And as long as we weren't in war, the federal government did very little. And, excuse me. So the bankers were not thrilled about how much money they had to put into reinsuring the financial system so they would continue to have access to low-cost deposits. So they pushed for the creation of a lender of last resort. So they decided to have this meeting in Jekyll Island, off the coast of Georgia, and they all boarded a train. They were not supposed to acknowledge each other, so they all went to this place called Jekyll Island, and they all went in stealth. And they had a meeting, and when they produced the first document, they called it the Banking Cartel Act. So their objective was to create a bank cartel.
At least they were clear about their intentions.
Yes, but politically they had to change the name, so they changed it to the Federal Reserve Act because that would sell better than the banking cartel. So, sort of like we call, after September 11th, we call the act that gives the governments the right to surveil you 24/7, violating the Bill of Rights. We call that the Patriot Act. So, and I like these, the Affordable Care Act that made healthcare more expensive and less available. So we can go on with all the bullshit names the government gives.
Jeff, Americans are known for really good marketing. If you know, in tech circles, a lot of Israeli companies come to U.S., Asian Pacific Rim, really good at marketing. I think that's what you're witnessing there.
And so they wanted to create a lender of last resort. So they basically created this Federal Reserve System, but they wanted to give the illusion that this was a public entity. So they created this Federal Reserve Board of Governors, and they created these district Federal Reserve banks. So now there are 12 Federal Reserve Bank districts. So who owns each Federal Reserve Bank? None of you know. Okay, who's on the board of them? None of you know, but they're all privately owned. So who really controls the Federal Open Market Committee? Okay, that's the Board of Governors. The bank presidents control the Federal Open Market Committee. So where are open market operations run out of? Okay, they run out of the New York Fed. So who controls the New York Fed? Maybe Jamie Dimon does. So basically, the politicians, senators and congressmen have more access to what goes on in the NSA than the Federal Reserve. So the Federal Reserve doesn't have to basically say anything. All they have to go is swear and say, we're trying to comply with Humphrey Hawkins, we're doing our best. How we're doing it, we can't tell you, but trust us, we're doing our best. And that's basically what they say. And Humphrey Hawkins is a bill that basically says they have to promote economic growth with as little inflation and unemployment as possible. So essentially, basically when you have, if you really think about the IOU is basically issued by banks, but with the backup of all of you. So who insures it? You all do. The banks don't insure it. Their deposit insurance premiums do not cover the risks. It's the appearance that they're covering the risk. Okay? What happens is that when the banks go bad, they have recourse to taxes and the taxpayer. So given the fact that the federal government had
Even he's shocked about that.
given that the federal government had no money, how can you be a lender of last resort with no balance sheets? The whole point of instituting an income tax was if the federal government needed to have a balance sheet to support the banks, they could then tax us all so they'd be able to support the tax. So the reason why the tax code was instituted was so that there'd be enough money for the federal government to function as a lender of last resort.
Jeff, this all sounds like new but existing, just bad news bears. But we're all still using fiat currency. We have a tip jar over there, and someone put some singles in it. I'm hoping for a 20, but I digress. We're still using this system.
We gotta have a choice.
Do we?
Well, if you try and pay your taxes, what will the government take? Dollars. Okay. So
So you're saying they got a monopoly on this system?
yeah, the government will not let competition for payments. That's the problem for most crypto to be a form of payment, is the government is never going to let anything other than its own currency circulate as a form of payment. That's what and they did that with gold, and they did it with because of it's not how you classify things as a security or commodity. It's the tax law determines how you're going to use something.
Well, they have the guns.
If you hold currency
Jeff.
and you use it,
Yeah.
there's no tax consequences of you going and paying something. But if you're using any crypto to pay something, you're not paying with it, you're selling it.
But Jeff, you've highlighted a bigger problem, because U.S. government in particular, they have all the weapons, they have all the guns.
Correct.
They can force us to do
The jails, the police,
Whatever
the
we want.
guns, the surveillance.
So
Right.
what utility is any cryptocurrency then? Why we should all just pack up and go home and give up? They'll shoot us and they'll kill us, and
Right.
and that's the end of this story.
Well, I think the utility of Bitcoin is as a store of value. So if essentially every paper money regime has failed. So I think we're seeing the beginning of the end of this paper money regime. So if globally, if you study the stock market, the decline in bank stocks recently are mimicking what happened in 2007, 2008. So if you're looking at what's happening in global, why don't you take a look at the stock markets? You see a decoupling basically that's now no longer the case of the U.S. from the rest of the world. So the global stock markets are in a bear market, and the U.S. might be entering bear market territory. So technically, it's not down 20% from its high, but it doesn't mean a bear market. But if you take a look at the performance of financial stocks around the world and also in the United States, we're starting to see the type of declines in financial stocks the way we saw in 2007, 2008.
It portends something in the future, the specter of some demise, Jeff, but we still have the same question, same problem, the same question, which is why would organs of the U.S. government allow any cryptocurrency, including Bitcoin, to compete with the U.S. dollar?
Well, I don't think the question is what the government wants and what it'll have the capacity of enforcing. I was saying the strength to me of making Bitcoin, or any crypto, for me, I believe Bitcoin, but whatever you believe in another shitcoin, you have the right to believe in whatever shitcoin you want to believe in. But let's say for the sake of argument, Bitcoin to make me happy for the moment, which you don't necessarily have to do. But if 300 million Americans held one Bitcoin, okay, and started trading with it, okay, then basically that gives us the power, not the government. So I think a lot of it is mental. The government has the power as long as we're in fear of it. Okay, if we form a block and we all form a huge protest movement, look, you just need a few lunatics to go somewhere, and the government gets afraid. If we had 300 million Bitcoin holders, march down to Washington, okay, and sit there and protest against the U.S. dollar and against the U.S. hegemony over the payment system, politicians would do something. So ultimately, it is in our hands to change that circumstances, and I'm hoping that what will happen is that, not that I hope that the dollar will decline, but the dollar, I'm not doing it, the government is doing this, and the central bank is doing it, Wall Street doing it, and the banksters are doing it, is they're all debasing our money. And they're debasing ourselves in the process. They're impoverishing us in the process for the benefit of just a few. So ultimately, if people get less scared about holding Bitcoin or some other crypto, but again, I think it's Bitcoin, then ultimately the power would be conveyed back to us. Venezuela has had limited success in prohibiting, cryptocurrencies from circulating, and when governments get weaker and they lose credibility, then ultimately their ability to enforce things also diminishes in time. And I think ultimately our government will go through something similar to Venezuela. So I think for people here to think it's not possible, I would, if you take a look at the demographics in this country, we talk about our average income in the U.S. is about $60,000, but the median income is about $30,000. So half the population is making $30,000 or less. If we define what subsistence is for a family of four, we find about 1/3 of the population is living under subsistent wages. So about 1/3 of the population doesn't have $1,000 in the savings account. About 50% of the population doesn't have $10,000 in the savings account. So what are we going to do when 20 years from now, when Social Security is bankrupt, which is going bankrupt faster because of the quantitative easing and because of the low labor force participation rate, and we can't fund Medicare and all the health care promises. I don't know what people think is going to happen, but probably will have. That's why the government is getting more oppressive now. The FBI and all their reports, they say the biggest fear they have is not foreign terrorists or domestic terrorists. And who they define as domestic terrorists are groups that believe in the Constitution, that use the word liberty. That's who they're most concerned about, and they're most concerned for a good reason, because they know that they've broken the principles embedded in our founding documents.
Jeff.
They're the rule. They're the illegal class.
Give him a few seconds to applaud you, and I know a lot of questions are coming, and I'm excited for this. So you gave us a great foundation, and well, actually, let me follow up on that. You laid some groundwork, it appears coherent. You've offered an alternative. You laid some great groundwork to explain, at least generally, how we got here with the US dollar. You mentioned Bitcoin several times, but not everyone fully understands what that is. Can you walk through that for us?
You have to think about what used to work, what we used to rely upon is gold. And gold was mined. And so people went in the ground, they extracted gold, and after a period of time, gold was not very portable. So to make it easy to use, people minted it. So why did we use mint, and how did mints get centralized? Mints get centralized because we were concerned about counterfeiting gold. Not everybody could go around validating the quality of the gold. So what we did, the trust agent was those that were minted. And ultimately the government's got in the business of saying, we're going to be the trusted agent, so we'll mint the code. Of course, every government that got in the business of minting the coins debased the coins that they minted, and people stopped then trusting the government, and then the government eventually fell because it was busy debasing its coin and breached the trust that it had, and they found that the power was not successful in doing it.
In some there were, it's
if you
fraud.
look at Bitcoin,
Well, Jeff, I just want to distill that point more. Just to repeat this back to you. It's effectively fraud, is what you're saying, is what eventually led to the demise of all these governments that fiat or debased.
Yeah, they committed fraud.
Metal-based.
Yes, they committed fraud. Every government did it, and they all collapsed. So
Back to Bitcoin.
So back to Bitcoin. So now if we take a look at what are the attributes, what are some of the negative attributes of gold? Okay, the basic attributes is the validation of it. Okay, who's going to validate that gold has the mineral content? If you want to validate that gold. In Bitcoin, the work done on the blockchain solves that problem. Each Bitcoin is validated by all the nodes. So essentially, Bitcoin is a better form of gold. So it's mined, okay? It has rules under which that process is done. It's validated through all the nodes. There's a lot of duplication to make sure that if there are bad actors, the bad actors caught. So the whole ecosystem of Bitcoin is designed to do basically fraud detection, so that you can't basically create counterfeit Bitcoins. That's how you take a look at the activity of what the miners do, is they produce it and then make sure they confirm that they all validate it's real, and so that then you're confident that when you're trading it, you know that you're not dealing with a counterfeit currency. So, and while not anonymous, it's pseudonymous. So, like gold also has, similar attributes that you can exchange gold, and preserve your anonymity. But with gold, you still have to make sure is whatever people's giving you, is it really that quantity of gold? And with Bitcoin, the miners have already done that for you. So when it's exchanged, that process has already been validated. So it can be broken down into smaller units, and it's easier to transfer. So that's why Bitcoin is an alternative form of gold. So anyone who believed that gold was the best store of value, and historically it has been the best store of value, then basically Bitcoin is a superior form of gold. And that's how I would describe, in a simple way, Bitcoin.
So in historically, that's mining technology. They go gold and other precious metals out of the ground. Just explain at a really high level what the technology is at the base of Bitcoin. It's blockchain technology, right?
Well, it's multiple technologies, because it's a Merkle proofs and various other asynchronous. But so basically, what you have is to be able to create a block, you need a bunch of machines, and they're not necessarily working in cooperation together. They're actually working as adversaries to some extent, in competition with each other. But the active people working in competition with each other, validating the work of what you're doing, and keeping a ledger that's on every single node, that every time it's validated by all the nodes, basically is a system of how we produce a series of blocks that then form the chain that then confirms the emission of the Bitcoin. So, and the production of the ledger. So, and the quantity that gets issued is basically controlled over time with an absolute limit to it. So, and that absolute limit, right now we printed about, or issued about, what everyone heard was about 70-75% of the total quantity of Bitcoin.
You said we, 75%. I don't want to talk over you. You just said we. What do you mean by we?
Anyone can be a miner. So it's basically, anyone can work to produce money. So that's the beauty of it. What makes Bitcoin different than every other project? Okay, Bitcoin never did an ICO. Okay, so Bitcoin never raised money. Okay, Bitcoin was started out with a paper that was circulated. Okay, everything was in the public domain, and after the paper was circulated, under which it established the protocol, somebody decided to mine. So anyone could have done it. There's no barriers to entry of who could mine. So anyone can get into the business of producing money. Anyone and everyone can get into the business of producing money. Anyone who wants to work for the effort of producing the money will get rewarded for their efforts if they do so. And there's actually no barrier to entry. You can sit back and say to some extent there's barrier to entry if you can buy the computer equipment and things like that. But there is no entity. Unlike all the blockchain projects, there's no company out there. Nobody hires you, nobody fires you, nobody's there to scold you whether your work is doing good or bad work, whether you're working enough hours or not enough hours. Basically, if you work smart and you work well, you'll generate more Bitcoins, and you'll generate more revenues associated with mining than people who are not good at it. So, but there is actually zero barriers to entry. So essentially, it's out currency.
You're marketing this in a way. We all understand that you own a lot of Bitcoin. Can appreciate that there might be some bias there. A lot of the people in the audience are certainly interested in it. But
you might say there's a bias that I own a lot of Bitcoin. And yes, I own a lot of Bitcoin.
Sure.
But I have the same ability to buy any other token I want to buy.
Well,
I made a decision
Yeah.
not to buy. So I'm not sent back and said at any point in time I could have taken my Bitcoin and bought something else.
Right.
So it's not that I have a company that I make money off of promoting Bitcoin.
Yeah.
Okay, I think Bitcoin is the dominant currency, and I back my money with it.
You're,
so it's not as if I'm an employee. I don't get paid. No one from the Bitcoin community pays me to give a talk. I have the free choice to sit and take my money and move it into any other crypto that I want to do at any point in time.
Sure. And we'll
so
talk about those.
I hold it by choice.
Well,
so I hold it because I believe it, and I bet significant amount of my net worth in doing so.
Understood.
So
we'll get to other cryptocurrencies. You mentioned ICOs, shitcoins, and other cryptocurrencies. We'll get to it there in just a minute or two. Just to flatten out the rest of the runway that you hear, though, Jeff, you're advocating for this. It's a better solution than the U.S. dollar and a lot of currencies out there. You mentioned Venezuela. We talk about that just a little bit more in a minute. But you are forecasting or expect Bitcoin, because of its superiority, to at some point overtake the U.S. dollar. Is that correct?
yes.
Okay. And then let's just touch on Venezuela. I want to open it up.
I mean,
after
if the U.S. goes bankrupt,
Yeah.
why do people put their money in the bank? Do people really trust the bank? If the U.S. government came out the other day, and if you didn't believe the government would ever bail out a bank, and the government eliminated deposit insurance, okay, and you were an unsecured creditor, okay, to banks, okay, I don't know how much money would leave the banking system if everybody became an unsecured creditor of the bank. Okay, I think very few people would be in a bank if they were unsecured creditors. And if every bank had to go out and then convince the people that they really were good creditors, because right now they don't have to. If you think about the bank regulatory process, do you know that, if a bank, when the examiners go into a bank and they examine that bank and they say, gee, your credit officers are incompetent, you do all these things and you do it really horribly. Okay, the only people who have access to that report are the board members of the bank. Why doesn't the public have the right to that information? You would be surprised. I've been a board member of banks, and I've seen how bad some of the audits are and what the regulators, examiners accuse the bankers of. And if the public knew, they wouldn't have their money in those banks. But they keep them there. They don't care because essentially what they know is the government is behind it. So when we have so much finance allocated without people caring about counterparty risk because the government has assured it, you can't call that a free market. We're not allocating capital according to a free market allocation process. Most of our money gets intermediated with the banks, and the banks have capital guidelines that determine how they allocate capital. And through most of the world, one of the biggest assets in the bank balance sheets are buying debt of nations. So basically, most countries use the bank as a cheap way of financing government debt and government deficits. So the bank is not for us to have productive savings. The last thing they want a bank to do is for us to have productive savings.
Yeah,
they want to subsidize certain elements of society to be able to have them have a cheap cost of capital at everyone else's expense, and they make us feel comfortable by insuring our deposits so we don't ask any questions.
I just want to touch really briefly on
and that system is going to collapse because when the U.S. government goes bankrupt, then the guarantee is worthless, and when the guarantee is worthless, people won't hold the dollars anymore.
Well, let's talk about
then
that.
There'll be IOU nothings, and people will understand that they're IOU nothings.
Jeff, let's talk about an example of that collapse. You mentioned Venezuela earlier. What's going on there? There appears to be a beachhead. There's some use of Bitcoin or other cryptocurrencies. Can you tease that out for us, just as an example of what could possibly happen in other countries beyond Venezuela?
Yeah, in many of these countries, people don't want to take the currency anymore. It's a legal tender. So when people engage in transactions, in the past, what people did during hyperinflation, where people didn't believe in actual currency, they bartered. So now what we're seeing is instead of people bartering, they're using various cryptos. Some are using Bitcoin, and there's been who've been down there is Zcash and Monero, because in many of these currencies people want to preserve their anonymity because it's basically, I think in Venezuela, I think it's a death penalty if they find you using a cryptocurrency. So if you use a privacy-preserving crypto, which I understand there's a lot of people using Monero, and some using Zcash in these countries, so they're using the privacy-preserving currencies, which might happen the same here as well. We might find that people will convert to privacy-preserving currencies, and right now, Bitcoin doesn't preserve. It's pseudonymous, not anonymous. Monero and Zcash is anonymous, even though there's some work off-chain in making Bitcoin anonymous, and think probably in a couple of years there will be anonymity in Bitcoin exchange.
I want to go back to two other terms, talk about other cryptocurrencies, and then we'll open up to the Q&A. You mentioned ICO, that is an initial coin offering. You distinguish Bitcoin from other cryptocurrencies, Bitcoin having not gone through an ICO. generally in financial media, it's perceived as a controversial means of blockchain companies crowdfunding for a specific type of tech startup, typically a blockchain technology. You call other cryptocurrencies that aren't Bitcoin shitcoins. Explain your reasoning.
I think I have a number of reasons why they bullshit. One is, for me to give money to, I think anyone who has been, a fairly seasoned investor, whatever currency you invest in, whatever entity you're in, when you're betting on something, you like to know who the management team is, you like to know what experience they have, you like to know that they're basically working full-time on the project, you like to know that they're going to disclose information to you, you want to know what they're doing with the money, you want to see a business plan, and you want to see how it evolves relative to the business plan, and you find that there has to be some sort of governance structure. So what the ICO has basically been about, and it's basically because of the nature of everybody trying to do what's called a utility token. So a utility token is something that's not expected to basically really appreciate value. It's you're investing in something that you're going to use. So since you're going to use it, it's not really a company, and because it's not really a company, and therefore you shouldn't ask what it's doing. You should just begin using whatever token that they're working on. Only most people pretty much ran away with the money, and if you ask, or they spent it on marketing dollars. About half of the budget is, I think even more than half is probably marketing dollars. So I think if you really did audit these projects and find out how much of them really built out the tech, they probably have built out almost no tech.
That would be.
So for me, the issue is just I don't think anyone should invest in something that has bad governance structure. So as a philosophical principle, anything that has bad governance is, it's a shit stock or a shit token, or a shit coin or whatever. But basically, if somebody's taking my money and I'm giving it to them, and I give it to them where they don't have any sense of accountability to me, shame on me if I decide to invest that way. And if I have people invest in projects where they're doing it as a hobby, and they're in 10 different other projects, and they're on full-time on nothing, I just think that's a bad way of investing. So, unfortunately, given human frailties and our cognitive dissonance, when Bitcoin started rising and a lot of these ICOs went up a lot in value, then people said, "Fuck the governance, I'm going to make quick money." So people just threw away discipline because they saw the quick payday, and so enough people threw away all sense of what should be prudent investing standards into just basically speculating on the quick 10x because they could smell the money. So, so for people who invest like that, this is the market they deserve.
And
the collapse of the currencies is what they deserve when you invest that way.
And just to peel back the hood,
there's one thing Wall Street said.
Yeah.
There's very little that comes out of Wall Street that I agree with. But one of the things that when I started my career at Salomon Brothers, I traded Partners Capital, and in 1979 and 78, 79. And so that's when the first time I heard the expression, "A fool and his money are soon parted." So, but Wall Street said, but they added to that, and our role is to expedite the process of taking money away from fools. So I don't ever want to be the person that takes money away from a fool, because that's not my ethical framework. But I think ultimately, if you're foolish with your money, you deserve the consequences of it.
Interesting libertarian take. I do want to just focus with one question, then we'll open up to our Q&A. On those who have issued cryptocurrencies through an ICO or other means, you mentioned a lot of them spent the money on marketing. It sounds like you're saying some of those who've collected money misrepresented to their investors. It sounds like you're saying
I think it's a couple of things. One is
fraud.
I think I think there's a lot of fraud.
Yeah.
So I think there's a lot of scammers. I think also the other thing is people didn't know, because people read the Satoshi paper and they saw, cash and payment system. Everybody thought the best utility was a payment system. So I think the least form of utility is a payment system, because that's ultimately what the government is not going to let you do. So how something's going to function as a payment system that's subject to this type of tax regime, I just don't see it succeeding. If you're going to do micro payments, which means you're going to do a lot of small payments, think about how complicated the tax return is going to be. That every time you're buying and selling small payments, and you have to always record your basis on this stuff. And then once you get granted a token, so if I'm an advice partner, they grant me a token. the granting of the token is taxable. So, and then it gets worse tax treatment than the granting of a stock option. So if you're part of the management team and you get granted tokens, that's taxable. So the tax attributes of all the tokens doesn't give it utility as a payment. And then the worst thing is that people that are trying to design a system is they tried to make it both a payment and a store of value. So people didn't know how to design the token. So I think that was not because of the fact that they were scammers. It's like the first person designed the token one way, and then everybody copied everyone else. Because that's basically what happens is, if you take a look at the words of white papers, most of these documents, everybody's copying everybody else. So whoever, so there's a lot of what you call path dependency. The first move is basically decided, everybody else has basically copied the first mover. So that's another reason that they made them shitcoins, is because people didn't really know what's the token to be used for. So they didn't understand what was the best use case for the token. So no matter how good your project is, if your token design is wrong, the project will fail.
Last
because
question,
the token
Jeff.
won't do what you're hoping the token to do.
And last question, Jeff, I want to end on this. Do you see uses for blockchain technology beyond Bitcoin?
Data sovereignty.
Okay. Well, one on that note, I love the terminology, data sovereignty, and I do want to make sure that we get a bunch of questions from people in the audience. You just raise your hands. I want to make sure also. Oops. I'm going to drag that with me.
Should I face the camera or?
No, you're fine. Actually, I'm going to hand you the microphone. I just want you to say your name.
Sure.
Clearly.
Okay, Greg Nigershack.
Hi, Greg.
And so, first of all, thank you for coming here and giving us sort of a background on the US dollar and the greenback and how we got to this point. I have a question. I just wanted to take 20 seconds just to say, this reminds me of two previous, I'm a big believer in technology decentralizing, giving power to people. Two previous revolutions. One was the printer, okay, where everybody can print, but before you had to essentially have somebody print for you, and if it was unacceptable, then you couldn't get it printed. The other is the phone system, where you had the switchboard operators, and now you have voice over IP. Anybody could do anything encrypted and nobody knows. So government had to evolve and accept it because they couldn't, they couldn't get it to work. So my question is this: scalability. Bitcoin is a little different in that there's one monolithic ledger that everything has to record everything. So you mentioned people buying, 300 million people getting a Bitcoin. Let's say 21 million people. They can only do 7 transactions per second at the moment on the main chain. And if people were actually going to use it as a currency, they would have to use it as peer-to-peer payments in your tip jar. What do you see as, is it going to be layer 2 technologies? Do you think that layer 1 will be able to handle everything? Because if you go to layer 2, isn't it going back to sort of trusting sort of centralized actors here and there? So that's kind of my question. How's it going to be a currency at the end of the day?
My bet would be, and it's we always have trade-offs. So I think yes, Bitcoin is not scalable to be a currency. It's a good store of value now, and I think it'll be a while before Bitcoin is needed as a currency. And I think ultimately at that point in time, when Fiat falls, I think we'll have other forms of currencies and it won't just be Bitcoin. So whether Bitcoin will be the global standard or not, if Bitcoin can't solve the scalability issue, and layer 2 ends up being able to basically cause a reduction of trust in it, then what we might see is just currency competition, and we'll see alternative currencies out there. And that's not a bad outcome if there's not just one global currency, but that there's currency competition. So I mean, I embrace currency competition. One of my mentors was Hayek, who wrote about the denationalization of money. So I probably was most influenced by Hayek and Coase when I was at the University of Chicago. So so I don't have to. I'm not worried about necessarily thinking that Bitcoin will be the only global currency out there, because I don't think they're going to be likely to be one global currency. I think the effort that the governments will try and do, at least some governments, will be that one of the the dollar debase will be the effort of doing the SDR. So I think that Sino-Russian bloc would like to see the SDR, because with the SDR, after World War II, Keynes wanted to create a global currency, but when they had the meeting to determine the global system, the Bretton Woods meetings, basically at that point in time was Great Britain was pretty irrelevant after World War II. They kept Keynes to give the impression that it was a dialogue, but it really wasn't a dialogue. The U.S. set up the system it wanted to do, but to placate Keynes, they built an IMF and they created this SDR. And Keynes' vision was that SDR would be the global currency, and it represents a basket of a number of different currencies. And about a year ago, China became part of the basket. And China's percentage of the basket represents a higher percentage than the RMB is in the global capital markets, and the percentage the US dollar is in the basket is a smaller percentage than what central banks hold of dollars all over the world. So if we get to an SDR standard, because the US can't intimidate people through SWIFT and the payment system, in fact, and all the things the US government does to basically use fiscal terrorist and currency terrorist policies, if we move away from the dollar, and what you might see is a movement to move towards the SDR, that would then basically have central banks sell off a lot of dollars and buy RMB and other currencies, and would cause a significant shift away from the dollar, and probably would have a significant adverse impact on the U.S. economy.
And these,
So,
Jeff, these SDRs are security.
Special drawing rights.
Oh,
Yeah.
drawing, just different from the other SDRs.
So yeah, it's special drawing rights. So, and they would like to see the IMF, because the U.S. participation in the IMF is not outweighed, so the U.S. can't control the IMF. So as the dollar loses its power, and we can't practice dollar hegemony, maybe even the U.S. will look to adopt Bitcoin and become a hard currency country to exert its dominance again.
Interesting twist given what you said earlier. There's a few questions. We definitely have time for a few more. I'll go to Jen in back. Grab the microphone, make sure you say your name.
Hi, Dan. So you know a lot about what's wrong with cash that's circulating right now. I just wanted to know what you would think the ideal currency would have. What characteristics?
Bitcoin. Read the Satoshi paper. Just read the Satoshi paper. That's the ideal characteristics. So it has a fixed quantity. It has a way that it's produced that makes it, so far, it hasn't been able to be counterfeited. Even the currency we have today can be counterfeited. There's no discretion over issuance, and there's a ledger not controlled by any one person. So that seems to be an ideal form of money. Nobody can control the ledger. Nobody can modify the ledger. Nobody can counterfeit the currency. And how it's issued, there is very well-defined, predefined rules to it.
So in sum, Jeff,
so
Bitcoin
that
is your
seems
answer.
to be, and that seems to be ideal money. That's what gold represented at this point in time.
Yeah. In sum, Bitcoin's your answer.
Yeah.
Let's get some other questions. Go to David in back. Microphone's on. Just to say your full name.
David Banfield, thanks very much, Jeff. I'm completely on board with all your descriptions of the creature from Jekyll Island and the whole fiat currency globally a debacle. My question regarding Bitcoin, aside from its stable value, because there's a lot of volatility, especially early on. My question is, once all the Bitcoins are mined, all of that intense server farms that are required to continue adding blocks to the chain, don't they lose their incentive? What incentivizes them after all the Bitcoins are mined?
Oh, there's still incentives for the mining after that, to preserving the ledger.
Okay.
So the ledger will be preserved after all the tokens are on. So there's still fees associated with the mining of it to keep the integrity of the ledger. So just because it can't get printed doesn't mean there's still not economics associated with the trading and exchange of Bitcoins and the preservation of the ledger. So at that point in time, the fees will be, significantly reduced. So as they continue to be reduced over time.
So there will be, just to distill that more, Jeff, once we reach that cap, it's 21 million of Bitcoin,
A little over that.
right?
Will
What
we
exactly?
ever actually reach the
Well,
cap?
But
just, I'll get to you. Thank you. Just to distill that point, there's still incentives to continue mining, is what you're
Yes.
saying. Okay.
Yes.
Great. Let's grab another question here. Just say your full name.
My name is Juan Williams. Thanks for coming. I got a two-part question.
Just we'll keep it in one.
The Security and Exchange Commission, if they allow ETFs, they're saying Bitcoin can explode because institutional investors will start getting into Bitcoin. Let's assume that they don't. What countries will, okay, forget the US. Can Bitcoin survive country by country around the world without the US? And then two, you talk about store value, 3 times you said store value, but this woman here, if I buy a car from her for $30,000, right? She gives me $30,000, I give her the car. If she gives me $30,000 Bitcoin, I give her the car. 6 months from now, I have no idea if my Bitcoin will be worth $30,000, $3,000, and $300,000. So how is that a store of value when the volatility is so high? But I can count on the dollar within 3 months, 6 months from now being worth $30,000.
So
But
can
the issue is, well, the issue is what 30,000 will get you, okay? So.
Well, Jeff, do you want to answer the first one first? First question was,
Well,
can Bitcoin survive without the U.S.?
Of course it can.
Okay. Second question was Bitcoin is volatile.
Bitcoin doesn't have a nationality, so so unless you start probing where wallets are, we don't know how many wallets are located. I mean, we know how many accounts are in Coinbase and whatever. That's retail trades. The big trades are not Coinbase. All the big trades are OTC, and so who even knows how important U.S. is to the ecosystem of Bitcoin? So I think U.S. is pretty irrelevant to Bitcoin. And actually, if the U.S. tried to be more hostile to Bitcoin, it's more hostile to Bitcoin because their own financial system is weaker and probably would encourage further investment in Bitcoin because the more hostile it is, the more it's a sign of being weak, not strong. So let me ask this question about what $30,000.
Yeah, his question was
if I give you $1 today, if I give you $1 a year from 10 years ago, and you went to how much of your rent would that dollar cover today, or your house relative to was 10 years ago? Okay. So the reality is, if you look at most of the things you purchase, college education, textbooks, healthcare, housing, all have had a significant level of inflation. So your money's being debased. So that's not stable. So 10 years from now, if I looked at my purchasing power of any form of currency, okay, because right now this is the 10th anniversary of Bitcoin. So if you look at 10 years, if you look at your purchasing, what currency has given you more purchasing power than Bitcoin has in the last 10 years? None. So that seems to be a pretty good store of value. If you held any other currency, what you could buy with it is a lot less. If I gave you $1 10 years ago and 1 Bitcoin 10 years ago, okay, what would you be able to buy more with today? The dollar or the Bitcoin?
But he asked me to count. So in January, Bitcoin was almost 20,000. So if I gave her 20,000, she gave me the card. I have the card. She has 20,000. Today, she has 6,000. So she's pretty pissed, and I'm pretty happy.
Yeah, but what if you were in Venezuela?
Yes. What if you were
hyperinflations don't creep up. Okay, you might find your dollar will buy you a reasonable amount today, and you might find that a month from now the dollar will get you almost nothing. So if you read the history of hyperinflations, they don't creep up. Okay, it's a jump event. They don't move from 1, 2 to 3. It's like one day there's one little, it's like the butterfly effect, So it depends upon what the circumstances are. A butterfly flapping in wings and what part of the wing can cause a tsunami in another part of the world, depending upon what the conditions of the world was at that certain moment. So what happens is, if you believe that the dollar will last forever and be a good form of value, then yeah, if you believe the dollar will always be a stable source of value, then buying these cryptos is a bad bet. If you think the current fiscal situation of the U.S. is sustainable, then you can borrow, run the type of debt levels, have the interest coverage be such a high percentage of the government, continue to grow spending, continue to have all these fundings, all these programs become. We have the pension system is bankrupt, the student loan system is bankrupt, Medicare is bankrupt, Social Security is bankrupt. Most people don't have any capacity of funding for their retirement. So you think this is all going to end beautifully, and that you believe that, you're entitled to believe that, and hold the dollar, and good luck.
So if Bitcoin is capped off at 21 million, right? What happens when it's all mined? So that means that demand goes up because there's only limited supply. So that inherently means that each Bitcoin is worth more and more and more. And if I don't ever own any,
Well, if everybody owns Bitcoin and it's distributed throughout and it's used as a payment, then probably would become a stable coin. At that point in time, as Bitcoin gets adopted by more people, its volatility will be reduced.
And that might be
And this year,
and
this
Jeff-
year, Bitcoin there are a whole bunch of stocks that have been more volatile than Bitcoin this year. So the level of volatility of Bitcoin this year has not been very volatile.
We can talk about stable coins after. I do want to continue with questions here. I know you still have one, or did you already get answered? Okay, let's go to you, stable coin.
Yes, hi. My name is Jeffrey Wernick. I think I like the decentralization concept of Bitcoin, but one of the questions that usually comes up is what is the intrinsic value behind Bitcoin? What, like you earlier talked about, yes, money is based on just trust. Would it be fair to say that it applies the same for Bitcoin? What is the real intrinsic value in how complex is the mining process? Because I know there's mining behind it, but what is the intrinsic value of Bitcoin? That would be my question.
I think there's several things I would say to describe as intrinsic value. One is there's not a single point failure. Okay, there's not one person who can subvert Bitcoin. Okay, not one entity, not one person can subvert Bitcoin. And ultimately, it's the game theory and protocol design that you either decide whether you trust or don't trust it. So I think the rules, if you trust the rules, you trust what's a product of the rules. So for me, the intrinsic value are the rules. And I think that's most of the things in life is we have rules, and the rules we trust, the intrinsic value is the trust we have in those rules. And if we don't trust those rules, then we don't follow them. So I think if enough people form a consensus that they figure out that these rules make sense, and they're trusting that everybody's complying with this set of rules, and that any bad actors can't exist because the system will not permit it to exist, which basically means that nobody can counterfeit it, or manipulate the ledger, then that's its intrinsic value. The intrinsic value is the rules itself and the inability to game the rules.
So Jeff, just I want to repeat this back to you so everyone understands. Distilled, it's a relative argument. It's not that Bitcoin's necessarily a panacea. It's that everything else is worse.
Yes.
Okay. Next question. And we have, if you keep them short, and then also a question for each one. I'll go to you, James. I know it's on. Say your name.
Hey, James Andrew. I just want to make a quick comment that I think you'll agree.
Can you give me a formal question?
Yeah, well, no. I wanted to define a term, intrinsic value. We talk about it, but that's a term I never knew what it meant in terms of economics until I studied Bitcoin.
Is your question, what is intrinsic value?
Well, yeah, but I want to tell you, I want to add to that. Intrinsic means nothing more or less than it is limited by its internal characteristics, as opposed to extrinsic, which means the value is attributed to it from the outside as a fiat currency. So if there's this mystique around intrinsic value of gold, for instance, it just means it's limited in its internal characteristics. That's it. That's important to know.
What's your question?
that's it. I just wanted to.
I'm so deceived right now.
Well, that was basically my answer.
Yeah.
So the intrinsic quality are the rules embedded in it, and you trust those rules, and that's what gives it quality. Exactly.
All right, Jeff, it's Lin Dai. So my question is, so Bitcoin is like gold and other commodities, and like the Jobs family and Gates family keeping tons of it in a vault in Switzerland, like literally. So how and at what point will Bitcoin be popularized? When will my mom like know there is value in holding Bitcoin, right? Like how, and until that point, that watershed moment where like general consumers are on board, isn't it just kind of like playing tools between commodity and currency traders and speculators?
No, I can't speak for traders and speculators. I hold, so I've never sold a Bitcoin. So I just accumulate more. So I think with respect to, again, what I thought about is when the payments, there's something called Gresham's Law. Bad money forces good money out of circulation. So when people no longer accept bad money, then Bitcoin will start circulating. As long as bad money exists, it's better to spend bad money than good money. So if you have money that has a bad attribute and a good attribute, and you have equal halves of one, which one are you going to spend? You're going to spend the money that has the bad attribute and hold on to the money that has the good attributes. So ultimately, when you want, if you believe money, paper fiat will always have a good attribute, then maybe Bitcoin will never be used, and then eventually it won't even be a good store of value if there's so much trust in the financial system and every government is solvent and people don't think they need to hedge against it. But outside of the fact is everything is correlated with your belief in fiat, and all the assets are tied to your belief in fiat. So if that belief in fiat dissipates, okay, everything tied to that is going to go down as well. So at this point, even if people go and buy insurance, so to the extent that if you think there's even any potential risk that fiat will fail, okay, the only alternative you have is gold or Bitcoin. So there's no other option that won't be correlated with the collapse of fiat. If you own real estate, that'll go down in value. It's all levered because everything else is levered off of fiat. So everything that's levered off of fiat, that is all going to go bankrupt because we'll have hyperinflation, that all default on their loans, and all of that will be worthless because what keeps the values, ultimately right now, what determines who gets assets is who has the cheapest cost of capital. So right now, everything is owned based upon people that's what's caused the wealth inequality. It has nothing to do with anything other than the central bank is the biggest tool for promoting wealth inequality because who gets to own assets is who can produce the cost of capital cheapest. And there are only a few institutions that can reproduce the cost of capital very cheaply. And for everybody else, so I think, for example, the example I give is I once did an analysis. I was looking to, several years ago, I was looking to bid on a property. And I was bidding against Blackstone. And, so I went to the bank that wanted to finance me, and I did my cost of calculations. And I called somebody I knew at Blackstone, and I said, what's your cost of capital? And then I figured out how much cash flow I needed to basically to compensate for my cost of capital disadvantage with respect to Blackstone. I needed to produce 30% more cash flow from the business, from a real estate property, in order for me to be able to compensate for that cost of capital advantage. So managing the property, I maybe can get 5, 8, 10% more cash flow, but 30% cash flow in a piece of real estate, nobody can do that. Okay, so basically nobody can compete with Blackstone because nobody can reproduce the cost of capital that they reproduce, so they own the assets. So given the fact that assets are all owned by people who produce a low cost of capital, okay, the only people they sell it to are people who they sell it to as a low cost of capital. When that game ends, all these asset values will collapse in value. And the people who buy them will be the people who own Bitcoin. Okay?
Thanks for that, Jeff. Certainly some counter arguments to that. I do have time for 2 more questions, and then we'll return to the one. Yeah, Adrian, state your name.
Adrian Ashley, and we met in Half Moon Bay. Great to see you again. I absolutely thoroughly enjoy you. Now, it was mentioned that they kept saying when Bitcoin runs out or when they're all done, but it was my impression, and I think I'm right, that it never runs out because it always halves and halves and halves and halves. And when you're talking about the energy it costs to produce a fraction of a Bitcoin, won't that automatically make the Bitcoin value skyrocket and get us to that $1 million Bitcoin? What do you think about that?
I think, one is, yes, the key of Bitcoin is not necessarily how many, there's 2 issues of how many circulate and the throughput for exchange. So one is very little of exchange is really done super fast. So you take a look at what's settlement in securities markets today. If you buy and sell a stock, how long does it take to settle? It's not 10 minutes, I can tell you that. So for many transactions, the settlement of Bitcoin is cheaper and quicker than the settlement of most transactions people do in the world. So for everyday payment, for small items, no, it isn't. So, but for almost everything else, Bitcoin is cheaper and faster than any other form of settlements. And so, yes, the key aspect of Bitcoin is its divisibility into almost infinitely small units. So you can trade any single unit. So the question is, what's the value conveyed by that unit? So it's not how many you need to have, it's the fact that they're almost infinitely divisible. That's a key attribute of it. And you don't need to hold many to have a lot of people own it. It's not like and yes, that'll cause the price to go up, and then it'll stabilize. There are estimates that if Bitcoin replaces the monetary base, it's about $1 billion. If Bitcoin is a substitute for gold as a monetary store of value, it's about $450,000. So when people think about money, there are different definitions of money. There's M1, M2, M3, and M4. If you take a look at the broadest monetary aggregate, which is M4, the amount of money that actually gets used for spending is less than a third of the total money. So most money is used for savings, not for spending. So Bitcoin is good for savings. It doesn't need to circulate. It is divisible, and it'll continue to circulate independent of whether more can be issued or not. So we had periods of time when we had little amount of gold discoveries, and the world didn't come to an end. And during the 19th century, the U.S. had deflation during the 19th century. The only inflationary period the U.S. had in the 19th century was during the War of 1812 and the Civil War. Outside of that, and the greatest period of growth in the U.S. was in the was what people called the Gilded Era, and there's a lot of bad education about what happened during the Gilded Era and the concentration of wealth during the Gilded Era and how much the middle class grew during the Gilded Era. So that was the period where the U.S. progressed its most.
Well, Jeff, let's leave it there and stay on topic. Quick note, the Fed used to publish, if you remember, an M6 and M7
they stopped
money supply. They stopped
the
doing
Fiat index.
Let me just get one more question for us, and then we'll turn it back over to Monica. This has been great so far. Or just say it for me.
Darren McElvey, how are you? This is a little bit on the controversial side, not that anything else is controversial, but in normal terms, you are attached to some political movement.
Am I?
You're funding Vantage Project?
No, man.
You aren't. You're advising.
You get to your point and I'll tell you.
Yeah, I'm curious how you see crypto or projects on the political spectrum.
Okay. So, at one point I had a conversation with Bannon about issuing crypto now the purpose of the coin had nothing to do with the politics of Bannon. It had to do with the fact that given the fact that he reaches out to people who are politically disaffected, the whole point was I was trying to build a token that would create an alternative social media and data sovereignty movement. Okay, that would not necessarily have Bannon. All I wanted to use was the Bannon endorsement token. Okay, so that I would get access to all the movements that find his message appealing. Because if you think about, the people who like Bannon, the people who voted for Trump, the people who voting for all the alternative movements in Germany and Italy and Sweden and in Brazil, these are all people who don't necessarily buy into that ideology. These are people who feel that that government has not been accountable to them at all. So they're just desperate people hoping that the system will begin working for them, not against them. So all they just know is the establishment has fucked things up, and they don't trust the establishment anymore. What I would say is, if people in the U.S. were happy, after Obama entered the presidency, if the people were relatively happy about the state of their personal circumstances, they would have voted for Hillary or Jeb Bush. Okay? But the Democrats didn't want to vote for Hillary. I mean, the establishment Democrats wanted Hillary, but the Democrats wanted Bernie Sanders.
I think Jeff,
The
just
Republicans-
to
the
stay on
Republicans-
point, because
Yeah,
it's
but
not a
my point, yeah,
political
my point is
question.
going back. So my issue was, I'm looking to spread adoption of Bitcoin. So I view getting access to this people as a way of spreading Bitcoin. Nothing to do with any sense of me identifying with any political movement. I mean, to make it clear, I'm an anarchist. I hate government. Okay, all government is evil. Okay, any use of force individuals use against each other is evil. You know, I believe in the non-aggression principle. So anything that violates the non-aggression principle is evil.
Thanks for that, Jeff. That's all the time that we have. I want to call Monica back up here, unless she disappeared. Oh, there she is. To host us off. Jeff, I want to shake your hand before we go. Just a big round of applause for Jeff Wernick. Monica, back to you.
Thank you. Back to me. I think I'm actually just here to pitch to you that there is still wine in the back. And basically, I think we've all kind of covered a lot of ground. I think some of you might have kind of come zero to confident a lot faster than maybe some of you already knew a lot of this already. But thank you for contributing. BlockTelegraph, thank you for being a part of this. And I hope you guys come back for next month's event. What is the exact date?
We haven't nailed down a date.
Oh, I thought we had a date. Sorry. So whatever that is, we'll let you know. And yes, please stick around. We're going to have a conversation for another half an hour or so. And then we've got to be out of here. So thank you so much.